Nifty 50 forecast. Will India-US trade deal push markets up? Key levels and predictions July 7th. India-US trade deal. What to expect for the Indian stock market? Nifty 50 forecast. Will India-US trade deal push markets up? Key levels and predictions July 7th. Market watch for July 7th. Will the critical India-US trade negotiations make or break Nifty's momentum? Is India's market rally at a crossroads? With a looming trade deadline and mixed signals from institutional investors, your investment strategy might need a careful rethink. The Nifty 50 staged a remarkable turnaround on Friday after 2 consecutive sessions of decline, demonstrating the resilience that has characterized Indian markets throughout recent volatility. What began as another worrying slide transformed into an impressive recovery story by closing bell. During early trading hours, pessimism dominated as the benchmark index extended its corrective phase, plummeting to a concerning low of 25,331. However, in a dramatic shift that caught many traders off guard, the index orchestrated a powerful comeback in the latter half of the session, climbing an impressive 133 points from its lowest point. This resilient performance enabled the Nifty to conclude the day with a modest gain of 56 points, settling at 25,461. Despite this late rally, the week ended on a slightly negative note, with the index registering a 0.69% decline over the 5-day period. The recovery was spearheaded by financial heavyweight Bajaj Finance, pharmaceutical giant Dr. Reddy's, and IT bellwether Infosys, which emerged as the standout performers among large caps. Conversely, retail darling Trent, metal sector stalwart Tata Steel, and premium automobile manufacturer Eicher Motors found themselves on the back foot, experiencing significant selling pressure throughout the session. The broader market exhibited similar resilience. After experiencing substantial early declines, both the Nifty mid-cap and small-cap indices demonstrated remarkable elasticity, rebounding forcefully during afternoon trading to conclude essentially unchanged. This pattern suggests underlying strength despite temporary weakness. From a sectoral perspective, the landscape appeared predominantly positive. Barring the Nifty auto and metal indices, which remained under pressure, all other sectoral gauges finished in positive territory. The Nifty oil and gas sector displayed particular strength, while realty, pharmaceutical, and information technology sectors also attracted significant buying interest. But here's where things get interesting. Despite the market's impressive recovery, both domestic and foreign institutional investors maintained their selling stance in the cash segment on Friday. This divergence between price action and institutional positioning raises questions about the sustainability of the rebound. Looking ahead, market participants are fixated on 2 pivotal events scheduled for July 9th, which could dramatically reshape market sentiment globally. First, the outcome of the U.S. trade deadline negotiations with India carries significant implications for export-oriented sectors. Second, the release of the Federal Reserve's FOMC minutes will provide crucial insights into America's monetary policy trajectory. Both developments have the potential to inject substantial volatility into global financial markets. Technical analysts remain cautiously optimistic about Nifty's prospects. Nagaraj Shetty from HDFC Securities highlighted that the index has formed a reasonable negative candle on the weekly chart, following last week's breakout above the significant 24,500 to 25,200 range. This positions the Nifty at a critical support zone based on the polarity principle, a technical concept where previous resistance levels transform into support once breached. For investors unfamiliar with this terminology, it simply means that price levels that were difficult to cross in the past now tend to provide a floor when revisited. Shetty projects ambitious targets for the index, anticipating a move toward 25,700 in the coming week and potentially reaching 26,200 over the subsequent 2 weeks. He identifies immediate support at the psychologically important 25,300 level. Rupak Da of LKP Securities echoes this analysis, also pinpointing 25,300 as the decisive support threshold. In his assessment, as long as the index maintains ground above this level, bullish sentiment will likely continue to dominate. On the upside, to seize potential for the Nifty to advance toward the 25,800 to 26,100 range, with immediate resistance positioned at 25,500. A successful breach above this hurdle could potentially trigger accelerated upward momentum, offering short-term trading opportunities. Adding to the technical perspective, Nandish Shah from HDFC Securities observed that the index has crafted a bullish hammer candlestick pattern on its daily chart after finding support along the upward-sloping trendline connecting recent swing lows. For market newcomers, a hammer pattern resembles a T-shape and typically indicates a potential reversal after a decline, suggesting that sellers initially dominated, but buyers ultimately regained control. Shah interprets this formation as evidence that the recent pullback may have concluded, potentially setting the stage for the resumption of the broader uptrend. According to Shah's analysis, Friday's low of 25,331 now functions as formidable support, while the 25,600 to 25,670 zone represents the immediate resistance barrier that bulls must overcome. The controversial question many market watchers are now debating: is the Nifty truly poised for new highs despite institutional selling, or are we witnessing a temporary bounce before another leg down? With critical trade negotiations and Fed minutes looming, could this be the calm before a storm? What's your take? Are you buying this dip or waiting for more clarity before committing capital? Share your investment strategy in the comments below. Note to readers: the views and investment tips expressed by investment experts are their own opinions and not endorsed by the publication or its management. Readers are strongly advised to consult with certified financial professionals before making any investment decisions. India-US trade deal: what to expect for the Indian stock market? India-US trade deal: the looming deadline and its potential impact on the Indian stock market. As the deadline for the 90-day pause on tariffs announced by U.S. President Donald Trump approaches, investors worldwide, including in India, have been cautious, leading to a consolidation mode in the Indian stock market with a 0.7% decline for the week. The lack of clarity surrounding the trade deal has left many uncertain about its potential impact. India's Commerce Minister Piyush Goyal has made it clear that India will not be pressured into any trade deal that is not fully finalized, properly concluded, and in the national interest. This stance has set the tone for the ongoing negotiations between the two countries. July 9th marks the end of the 90-day suspension period of the Trump tariffs imposed on dozens of countries, including India. An additional import duty of 26% was announced on Indian goods. The Indian team has returned from Washington after holding talks with the U.S. on an interim trade pact, but discussions are set to continue as certain issues in the agri and auto sectors still need to be resolved. India has raised issues over 25% duty in the auto sector and 50% duty on steel and aluminium goods. The Indian equity market is viewing the U.S.-India trade talks with growing optimism, as signals from both sides suggest a deal is within reach. The temporary pause on tariffs by the U.S. and constructive dialogue has boosted confidence that a resolution will emerge before the July 9th deadline. But here's where it gets controversial. The sectors that are likely to gain in case of a favorable trade deal are IT, pharma, auto components, electronics, and textile. However, challenges remain in the agriculture and dairy sectors, which may be impacted by the existing tariff structures. A breakthrough would be a significant positive for India's export sectors, particularly IT, pharmaceuticals, and auto components, and could reinforce foreign investor interest in Indian equities. Meanwhile, Herschel Dasani, business head at Invasset PMS, believes that textiles, pharmaceuticals, and electronics are likely to see substantial benefits from tariff reductions and improved market access. However, the potential impact of the trade deal on the Indian market is not without its risks. A positive trade deal could boost foreign investor confidence further, leading to enhanced capital inflows and a stronger Indian rupee. However, if the deal falls short of expectations, short-term market volatility could ensue. Export-driven sectors, particularly textiles and pharmaceuticals, might face hurdles due to unresolved tariff issues. Against this backdrop, Nitin Jain, senior research analyst at Bonanza, advised investors to adopt a defensive position, concentrating on domestic-focused industries such as banking and FMCG, which are less affected by global fluctuations. investors should exercise caution regarding industries associated with global supply chains, such as metals and capital goods. Utilizing gold-linked ETFs or defensive investments can assist in reducing volatility. So, what do you think? Will the trade deal be a game changer for the Indian stock market, or will it lead to short-term market volatility? Share your thoughts in the comments below.